Weighted average shares outstanding is a calculation that you need to make to calculate earnings per share, which I'll get to in a moment. And there's three common ways that weighted average per share can change. So, as a starting point, let's talk about earnings per share. Now, a couple caveats. First of all, we're only talking about common stock earnings, weighted average shares for common stock, earnings per share for common stock. Secondly, outstanding means held by the public, shares that are held by the public. That's what outstanding means. And thirdly, what period of time? We're going to make it simple and say it's from January 1st to 12/31, so we want a weighted average for the year. Could be a different period. All right. So what's the formula? Net income minus preferred dividends, because we're only talking about common stock. Net income less the preferred dividends is the numerator, the denominator of earnings per share. Weighted average shares outstanding. So now let's talk about what can change. And we'll say that at the beginning of January, there are 1 million shares outstanding, common stock shares. A stock dividend. This is a way of rewarding shareholders that does not require cash. So let's assume there's a 10% stock dividend. So for every 100 shares you own, you get 10 more. What happens in this case is we go from 1 million shares to 1,100,000 shares, or 10% more. And it's important to realize that total equity does not change because of a stock dividend, because there's no capital contributions. Nobody's contributing cash or other assets. Equity doesn't increase for a stock dividend. So now we have 1.1 million shares. Then a stock split, and I'll do a 2-for-1 stock split. You'll see a colon, 2:1, 2-for-1, which means for every 1 share you now have 2. So we go from 1.1 million to 2.2 million shares. And again, equity doesn't change, because what happens with a 2-for-1 stock split is the number of shares double, the price per share gets cut in half, so net, there is no change in equity. And keep in mind that these changes can happen during the year, which makes the weighted average process complicated. So these changes can happen during the year. Finally, treasury stock, which is stock that was outstanding that is repurchased by the corporation and retired. Basically, we're taking it off the market. So let's say there's 400,000 shares that are bought back into treasury. Treasury is, that line is a subtraction in the calculation of equity. So we were from 2.2 million, let's say we buy back 400,000, we have 1.8 million shares outstanding. Now, again, those happen at different time periods, and that's more complicated than we can do in this video. But that's the beginning of how you calculate weighted average shares outstanding.